One of the more curious outperformers of the year has been the utility sector. Traditionally a rates play, some arguing now an AI play. Let's go to the expert. Mr. Massud Ghaussy joins us from NASDAQ IR Intelligence, lead analyst with a specialty in the sector. Massud, welcome back to the show. Hey, so kind of starting from the top here, I mean, has this become an AI proxy play for all the power, or is it still traditional utes?
Thanks for having me on your show, Oliver. So from mid-February to approximately mid-May, we saw a massive rally in utilities quite abruptly, and the reason being predominantly because of AI. So it's the AI theme that is broadening out into the utility space, and we see a lot of positive momentum with what's called the IPPs, the independent power producers, so nuclear energy. And also utilities that are exposed to data centers, Virginia being a prime example, are seeing a significant boost in their stock price. So data centers, AI, and also don't forget there are themes such as reshoring of manufacturing and also Bitcoin mining and EV charging, which has also been benefiting the sector in I guess, the first half of this year.
So there's a little bit more kind of secular impact around tech than maybe we would have assigned to this group 5 years ago?
Oh, absolutely. And I think this is playing out not only in utilities, but across various different sectors. So anything that has to do with data centers, that has to do with power, and demand from electricity is going up as a result. So those are the plays, the AI plays that are broadening out in the utility space.
Where does it show up in the numbers? Is it top line? Like, are we going to see utility companies? Forgive me, I haven't really been keeping too close a track. I've been busy with the chip makers and stuff, Massud. Are utilities like blowing out earnings right now?
So I think the only place where you see what's called a blowout in earnings is with the IPPs, the independent power producers. There's a lot of demand. They have been beating earnings and guiding higher. There are about 3 to 4 companies in the IPPs. And expectation for significant improvement in EPS rests with the so-called the regulated utilities, and it's all based on geographic location, but where there are predominantly large presence of data centers. So those are kind of the 2 ways of playing AI in utilities.
It seems like the earnings growth has been bigger than the sales growth, just kind of pulling it up here for the trailing quarters. Are these companies wringing out profits in a different way? Does it change like their balance sheet structure when you get demand from new places?
Oh yeah, absolutely. And historically, looking at regulated utilities, especially over the last 2 to 3 years, they have been struggling. It's a sector that has not had a lot of attention. Their market weighting as of March end is 2%, which is the lowest as per Piper Sandler in approximately 100 years.
Wow.
So it's a sector that hasn't, a lot of investors have not been paying attention, and the reason is twofold. From a fundamental perspective, there's also the trading aspect of it, the yields and the macro environment, but just looking purely at the fundamentals and the earnings, higher inflation has hurt a lot of regulated utilities because labor costs are going up, equipment prices are going up, commodity prices are going up, and the cost of capital is going up, and a lot of these are bond proxies, so cost of capital really impacts earnings. And finally, regulated utilities, their rates are regulated. That's why they're called regulated. And the regulators are reluctant to pass on costs to consumers. So as a result, margins have been squeezed. And finally, we're getting some breath of fresh air with this AI revolution that is heading both the IPPs, predominantly the IPPs, and also the regulated. So expect some top-line growth from some of the larger utilities as a result.
Okay. So the independent power producers, the leaders in this, and seems like there's a little bit of buffer for utilities now against any rate pressure if it comes back. But it still does play a role, like if rates go wild again.
Correct. So I guess when you're referring to rates as an interest rate.
Yeah, exactly.
Is that your question? Absolutely. So there's the fundamental angle to utilities, and then there's the trading angle. And over the last 2-3 years, there's been basically three major market themes. And one is that growth stocks have been outperforming. And the poster child of this is Magnificent Seven. And we're also seeing this across utilities. Second theme is constantly shifting narratives. In 2022, utilities the sector was the second top outperforming sector after energy. In 2023, they were the top underperformer. And in 2024, so far, it's an outperforming. And it's really, if you look at yields and the direction of yields, which is a function of inflation and the state of the economy, really describes a lot of where utilities are going. And one of the reasons why we saw a rally earlier this year, which has been slowing, is because yields have been falling. It has picked up again over the last few days, and as a result, we're seeing a little bit of underperformance here. And classic case in point, today, yields are down. The utility sector is the top performing sector.
Yeah.
And finally, if I may hit on the third major market theme over the last 2 years, is the S&P 500 and the 10-year Treasury yield. The correlation is at all-time highs. Last time we saw this level was back in the 1990s.
Yeah.
As a result, utilities, which are bond proxy and yield-oriented instruments, they have become notably more sensitive to the direction of yields, rates, and also the Fed's expectation as to where they will drive interest rates.
Good stuff, Massud. Appreciate the deep dive. Helpful for us to understand what's been going on here. Good year for utilities.
Of course.
Some answers. Thanks a lot, Massud Ghaussy, lead analyst at NASDAQ IR Intelligence.